Some of Australia's most innovative companies lead the way in terms of share market returns, with market leader Wisetech Global hitting a record high yesterday. Qantas forecasts a record profit, and the pay gap between casual workers and full-time employees grows. It's Wednesday, the 24th of May, 2023. Welcome to Fear and Greed, Australia's most popular business podcast. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, after the show, your interview today is with Sandra Lee, Head of Private Markets at UniSuper.
Yes, so it's all about what private markets invest in, and primarily that's infrastructure and real estate. We talk a lot about infrastructure and why big super funds like to invest in infrastructure. It's a really fascinating chat.
Yeah, it sure is. It's coming up a little bit later on. And it's interesting because UniSuper is really a pretty substantial fund, isn't it?
It's one of the big ones.
$115 billion, I think, in assets under management. But first, Sean, the main story this morning, Australia's most innovative companies are outperforming on the share market, led by tech leader Wisetech Global, but also including biotech companies and lithium players too.
Over the past 12 months or so, 8 of the top 10 performers in terms of share price performance have been innovative, mostly smaller companies that have had breakthroughs in either customers acquired or technology. I say mostly because one isn't so small, and that, of course, is Wisetech Global. The global tracking company's share price hit a record high yesterday. It's up 73% over the past year and around 100% in the past 11 months. It is the outlier because the other stocks are smaller and have really had breakthrough years. In the tech sector, Technology One has created a software as a solution product that SaaS, we hear a lot about that, basically means that you can pretty much run your business via an app anywhere in the world rather than relying on computers in the office. Anyway, Technology One, it's up 50% over the past year, including 3% yesterday after it announced solid sales and earnings. That share price has just been trending up all year. Imaging group Pro Medicus is another really interesting one. It's developed a technology currently used primarily by radiologists that streams images rather than using film. Potentially, it can be used by other medical practitioners. Also, when you stream vision, you don't have the data size issues that you do when it's film. That share price is up more than 40%. Great technology by all those companies that have triggered an increase in the value or the market value of those stocks.
There's some great examples there, Sean, but what about kind of outside tech stocks?
Well, biotech, neuro and pharmaceuticals is the best performer over the past year on the ASX. It's up around 300%. Now, earlier in the year, the US regulated the Food and Drug Administration approved its drug for the treatment of neurological disorder Rett syndrome in early childhood. We spoke quite a bit about that back then. That sent its share price flying. Next best over the past year is Telix Pharmaceuticals, which focuses on the treatment of cancer and rare diseases. It's reported strong sales in the US and it plans to roll out its technology in Europe and the Asia Pacific. Its share price is up about 170%. Then there's the lithium plays headed by Western Australian-based Liontown. Of course, it signed a deal to supply Tesla with feedstock for a new lithium hydroxide plant in Texas. Tesla's just broken ground on that building. Its share price is up more than 110%. One of the top 10, which is a bit of an outlier, which is kind of interesting, is Lovisa, the retailer. It's just had a lot of fans for about the last 12 months. In a sense, it's the exception to the rule because the other 9 of the 10, or at least 8 of the other 10, have really had breakthrough years, whereas Lovisa just seems to be fairly steadily increasing.
So really, what's the common factor among all of these? Is there a common denominator?
I was thinking about this. Ingenuity, I think, is probably, and I mean, that includes Wisetech Global because its parcel tracking software is considered the market leader, the global market leader. Ingenuity, just making a difference. I just think it's great to see Australian companies leading the way in innovation.
That's a real feel-good story today, isn't it?
We don't often have feel-good stories, and often we are criticised at times for always being negative, which is fair enough, and most media outlets are that way. So just occasionally, to have a story that just highlights how well some people or companies are doing, good idea, Michael.
Yeah, it's a great story. How did local markets perform yesterday?
It's pretty quiet, really. The S&P ASX 200 closed the day down just 3 points to 7,260 points. The market was stronger earlier on, then fell back in the final couple of hours of trading. Among the sectors, the worst performers were the consumer sectors, both discretionary and staples. The best were financials and real estate investment trusts. Among the large caps, Newcrest was down 1.7%, Wesfarmers was off 1.3%. BHP, Fortescue Metals, Woolworths, Transurban, Coles, they all ended lower. The banks were stronger. Commonwealth Bank and Westpac were both up almost 1%, while Macquarie Group jumped 2.3%. It's been pretty quiet in the market in recent sessions, in terms of trading at least. In fact, on Monday, only $4.65 billion worth of Aussie equities changed hands. Now, that's estimated to be one of the 5 slowest days for volume this year. That's explainable, on the Friday before a long weekend or beginning of January. It's not really explainable in the middle of May.
So is there kind of a reason for it then, or is it just one of those things that happens?
I think it's probably a bit of both. There's a lot of concern about the US debt ceiling issue and the negotiations there. That is part of it, I think. Also, exactly what's going to happen to interest rates here in Australia. There's just sort of a bit of a holding pattern at the moment. We've seen that with the Aussie dollar as well. That's been trading around that 66.5 US cents. Just things seem to be waiting for something to happen at the moment. I mentioned just then the US debt ceiling. Yesterday, Joe Biden, the president of the US, and House Speaker Kevin McCarthy said they remain without a deal on the debt limit, though they did call yesterday morning's talks productive and promised to keep negotiating to avert a catastrophic US default. Ahead of the conclusion of those discussions, Treasury Secretary Janet Yellen came out and said it's highly likely, her words, that her department would run out of cash in early June, and that default could come as soon as June 1. So plenty to think about there.
When Janet Yellen is dealing with kind of confidential information, is she Janet whispering?
It's too early in the morning for you to have been drinking, Michael, but that is pretty good, actually.
Thank you.
I got to tell you.
Thank you very much. I appreciate that. We'll be back in a moment with the rest of the day's business news. Sean, Qantas expects to record an underlying pre-tax profit of up to $2.5 billion in the current financial year. That's almost $1 billion higher than its previous best result, which was pre-COVID back in 2018.
The national carrier will also spend another $100 million buying back its own shares on top of the already announced $500 million buyback. Yesterday, the airline said flying activity was increasing steadily and would be at 93% of pre-COVID levels by the end of December. Forward bookings continue to indicate strong travel demand. There are a few things going right for Qantas at the moment after a pretty tough few years. Chief Executive Alan Joyce said fuel prices are normalising. That will put downward pressure on airfares. Obviously, there's plenty of people flying again and people are paying those higher airfares. He did warn, though, that there's a mismatch between demand and supply, especially on international routes. That's kind of a nice way of saying we ain't going to get back to pre-COVID prices, not yet anyway.
It's not a bad result for Alan Joyce to go out on, is it?
It isn't a bad result at all. Sometimes when you pay the prices that you do pay for airfares and you think about how much support the government gave Qantas.
It smarts a little.
Now, this reminds me, you and I were actually on a Qantas flight in the last 48 hours. And you obviously were further up the plane than I was. I was in 28D.
Well, just to clarify, I wasn't much further. I was in 23A. So you made it sound like I was up in like row 1 or 2. I certainly wasn't.
Well, our colleague, Adam Lang, from the weekend edition, he was a long way further up the plane. Anyway.
Oh, yeah.
My point was, it was an early morning flight. We'd done the show. We flew. I got on, and at some point I sort of woke up halfway through the trip. It was only an hour flight. And, the flight was quiet, except for row, 23? I looked up. I could actually hear your voice chatting to the person next to you, Michael. No one. The Sydney-Melbourne route, no one talks to anyone. You just don't do it. And there you were, chatting away, 7:30 in the morning. Poor bloke next to you probably had no chance.
I'm a very affable person, Sean. That's all I can say. On the topic of airlines and airports, Sydney Airport Chief Executive Jeff Colbert has resigned.
Yes, it's worth marking this. He's going to leave at the end of the year. Colbert has run Australia's biggest airport for 6 years. He oversaw it during the COVID-19 pandemic, basically when passenger numbers went to almost zero. He also was running it through the $23.6 billion sale to a consortium led by the US Global Infrastructure Partners and IFM investors. And he was running it when it was delisted from the ASX in March last year. The takeover then was very well timed, given it was the worst of the pandemic, and Sydney Airport's shares were trading well below their pre-pandemic value. The buyers probably got a good deal on that one. Anyway, Jeff Colbert, good luck.
Yes, indeed. Now, over the weekend, Sean, the Prime Minister Anthony Albanese said US President Joe Biden had agreed to push Congress to change the US Defense Production Act. Now, that comment has triggered plenty of excitement, particularly in the critical minerals and defense sectors.
That's right. It's emerged that what that really means is that the US government could soon be investing directly in Australian-based miners and defence technology contractors if the changes are made as expected by the end of the year. That allows Australia to be listed as a US domestic source, even though we're not, a US domestic source, potentially giving Australian companies access to about $1.5 billion in incentives that are normally set aside for American and Canadian companies. At the moment, only Australian companies with mines operating in the US or Canada are open to those sort of incentives. Under the proposal, Biden wants to include Australian-based production and manufacturing. Now, the government is very excited about this. Resources Minister Madeleine King jumped on it. She wants to spearhead a push to mobilise American capital for Australian projects. This could turn out to be a pretty big deal.
Sounds like it's got Sleeper Story written all over it for our weekend edition.
Do you want it?
Yes, please.
Righto, it's yours.
Thank you. All right, let's see how I go. Now, I mentioned this one at the top of the show, Sean. Australia's casual workers are getting paid significantly less than their permanent counterparts, with the hourly pay gap reaching an all-time high. This is according to new research.
Yes, now the study conducted by the Australian Council of Trade Unions found casuals generally earn $11.59 less per hour than permanent workers, or an hourly rate of $28.95. That's as opposed to more than $40. That's a pay gap of 28%. The pay differential is the highest on record, according to a report on AAP. Employees with the same skill level or occupation have a smaller pay gap, that's about 11%. The union noted the gap exists despite casuals receiving a pay loading of up to 25%, and it called for the Albanese government to scrap Morrison-era changes to the law. 1 in 4 workers are casual, Michael. Around 55% of the casual workforce are women, so the pay gap affects females more than males.
Yeah, pretty serious story, that one. Now, this one's a little bit lighter. Can you imagine, Sean, what it would be like if Australians living overseas loved their Prime Minister as much as Indians living in this country love theirs? Because Modi mania is a real thing among the Indian expat community.
That's amazing. The pictures were quite incredible, how excited the fans got. I just don't think Anthony Albanese, Scott Morrison, Malcolm Turnbull, any of those guys are ever going to attract the same sort of crowd further that Modi got.
No. Look, I don't think it would happen with many world leaders.
No. I don't know much about the Indian community in Australia. Obviously, they're very enthusiastic. We see that at cricket matches, and indeed that's one of the things that Narendra Modi and Anthony Albanese discussed working together in sport. Much more than that, though. They discussed free trade, a deal on migration, and closer ties around the critical minerals industry, green technology, and defence. Modi's 2-day trip is his first to Australia since 2014. Last night, he addressed a sold-out rally.
God, any Australian political leader would love a sold-out rally. How many people?
Give tickets away. 20,000.
Whoa.
20,000. This is the Kudos Bank Arena. Now, that's where you end up with big bands playing. So Sam Smith played there, for example.
Sam Smith and Narendra Modi are not two people I ever thought would end up in the same story.
That's kind of funny. He also held a round table with 20 corporate chiefs of major companies. He had a one-on-one with Gina Rinehart, a one-on-one with Andrew Forrest. He was certainly getting around Narendra. Anyway, very popular amongst his countrymen living in Australia.
Yeah, it's a great story, that one. Now, the Victorian Labor government yesterday handed down its budget, and in the words of some experts, it was brutal, hiking taxes on big business as the state looks to pay off its COVID credit card.
Certainly didn't miss. Now, Treasurer Tim Pallas said it was necessary to pay off that COVID credit card. An $8.6 billion debt levy on business with payrolls above $10 million a year is part of it. Higher taxes for property investors, that's part of it too. The levy will hit around 4,000 businesses and 380,000 additional landowners. The Victorian Public Service will also be cut by up to 4,000 jobs next financial year as part of major cuts to back office, consultants and labour hire. The tax-free threshold on payroll tax for small businesses, though, it will be raised from $700,000 to $1 million within 2 years, and the government will also abolish stamp duty for commercial and industrial properties and replace it with an annual property tax. That is something that the commercial property guys will be happy about. The government confirmed that the $10 billion airport rail loop and the $4 billion Geelong fast rail are on hold. There's no new money for the $125 billion suburban rail loop or the 2026 Commonwealth Games. Pallas forecast that the state would deliver a $10.3 billion deficit this financial year, but it will return to a small operating surplus in 3 years' time.
Sean, shipments of Australian coal have hit their highest level since Beijing banned imports back in 2020, potentially adding pressure to domestic energy prices.
The ban ended at the start of this year, and China's appetite for the high-quality coal supplied by Australia is gaining momentum amid concerns that rising domestic Chinese production includes too much low-grade fuel. Australian cargoes in April, mostly of thermal coal for power plants, jumped 75% compared to a month earlier. The total was about 3.9 million tonnes. That puts Australia's share of imports at 10%. That's almost double the level seen in March, according to a report on Bloomberg.
Okay, last one, Sean, before we get to international news, and this is one of your favourite topics. Hong Kong group EC Healthcare has topped Wesfarmers' offer to buy Australia's largest network of laser hair removal and Botox clinics, valuing Silk Laser Australia at nearly $178 million or $3.35 a share.
So it's one of my favourite topics because of it's a takeover or because it's about laser hair removal and Botox?
I think we know which one, Sean.
Yeah, let's just move on. So last month, Wesfarmers-owned Australian Pharmaceutical Industries pitched an agreed offer of $3.15 a share. That was about a 30% premium to Silk's price at the time, according to the Financial Review. Now this new offer has come in and Silk Laser's share price yesterday jumped 11% to $3.34. That's about the same as the offer price. It's very much David taking on Goliath. EC Healthcare is a minnow, really. It's got a market capitalisation of about $1 billion, or the equivalent of $1 billion Australian dollars. Wesfarmers, it's worth about $58 billion. Funny thing is, Silk's board has supported the new offer.
All right, on to international news now. And Facebook owner Meta Platforms has been hit with a record 1.2 billion euros fine for breaching European Union privacy rules, and it's been given a deadline to stop shipping users' data to the US after regulators said it failed to protect personal information from the American security services.
This has been ongoing. I think it's the fifth fine that Meta has had to pay, or Facebook or Meta has had to pay. The social network giant's continued data transfers to the US didn't address, and I quote, the risks to the fundamental rights and freedoms, end quote, of people whose data was being transferred across the Atlantic. That's according to the Irish Data Protection Commission. On top of the fine, Meta was given 5 months to suspend any future transfer of personal data to the US and 6 months to stop the unlawful processing, including storage, in the US. That's of transferred personal European Union data. The point in all this, lots of words in that, is that European Union members do not want the data or information of people in their countries to be transferred across the Atlantic.
And one last one, Sean. Boeing's boss has warned that new climate-friendly biofuels will, quote, never achieve the price of jet fuel, really pouring cold water on a central pillar of the aviation sector's strategy to slash emissions.
That's right. They're always talking about biofuels being the answer. Well, the Boeing chief executive, Dave Calhoun, doesn't think so. Airlines often say sustainable aviation fuels, SAFs, made from food waste such as cooking oil and plants, can bring rapid decarbonisation by replacing the kerosene-type fuels. Jet A is the typical kerosene-type fuel. They're used in aircraft today. But SAF currently accounts for less than 1% of global aviation consumption and trades for at least twice the price of traditional jet fuel. Calhoun said he didn't think that SAF will ever achieve the price of Jet A. If a biofuel doesn't achieve the price of a kerosene-type fuel, well, airlines aren't going to use it necessarily.
Okay, up next, Sean, is the Fear and Greed Daily interview with Sandra Lee, Head of Private Markets at UniSuper.
Yeah, it's all about investing in private markets, particularly infrastructure, why superannuation funds do it, what they like about it, the benefits. Great interview.
Yeah, it's a good chat. It's coming up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. And Sean, you know what it is today.
Wednesday.
Which means another episode of How Do They Afford That is out. That's our sister podcast with Canna Campbell, the founder of Sugar Mama TV. Today's an interesting one because we're talking about HEX debts, which has long kind of been assumed to be almost a no-interest kind of loan, or it's just a free money is kind of the misnomer that's attached to it. And this is something that Canna is really, really passionate about because a lot of people have suddenly been hit by the indexation of it because it is in fact tied to inflation. And with inflation soaring, then suddenly people have found that their HEX debts have been climbing a lot faster than they were expecting them to. So we kind of unpack all of that and Canna goes through some of the strategies and things that you need to be thinking about if you might be one of those people still with a HEX debt left over or potentially racking one up as we speak.
Is that you?
Oh, no, I don't have one left over. Well, the benefit, Sean, of doing an arts degree and journalism is that it's not the most expensive uni degree in the world. So I was able to pay that one off relatively quickly. So fortunately, I'm not in that camp. Do you still have any debt left over from uni? That was a very long time ago. Was uni free in your days?
No, I had a HEX debt, but no, I paid it off.
Oh, okay. Well, it's still worth a listen. You can find How Do They Afford That wherever you listen to podcasts. I'll put a link in today's show notes as well. Thank you very much, Sean.
Thank you, Michael.
It's Wednesday, the 24th of May, 2023. Make sure you're following the podcast and join us online on LinkedIn, Instagram, Twitter, and Facebook. And stay up to date on all the business news with Alexa and your Amazon Echo smart speaker. Simply say, Alexa, play the Fear and Greed podcast to catch the latest episode. You can grab yours now at amazon.com.au. I'm Michael Thompson, and that was Fear and Greed. Have a great day.